Hey, everybody. Welcome here to the session. It's Rodrigo here. We're going to be starting in about a couple minutes. Hang in there. We got Matt in the back setting things up. We're going to start here in a little bit. So make sure that you're ready and paying attention. It's a packed session. We'll see you guys in a couple minutes here. All right, everybody. Welcome to the session here. Rodrigo's in the house with Matt Maley, Chief Market Strategist at Miller Tabak. Really quick, folks, before we do get into all that stuff, big shout out here to a couple of you guys that were here. Just want to let you guys know we'll be going for about an hour plus here. Angelica, Chris, Derek. We got Guy Miller in the house. What's going on? Maggie, Nikita, Phyllis, Terry, Wayne, good to see you. All right, we have a packed house here, folks. And it's really good because the session we have today, you're definitely, you're going to be happy that you were here, right? So, all right, you got your shout outs there, folks. Ricardo, I see you. Ron Willis, what's going on, Mr. Willis? So really quick, folks, in the chat, let me know when you guys are good to go. Ricardo says, I want to say thank you because thank you on being able to make some profit and learn from your analysis. But yeah, Matt's the bomb, man. But we're going to be going over today trade ideas, strategies for these volatile markets with simple options with Matt Maley, right? His 40-year trading formula that he's developed. He's been in Wall Street for 40 years. Sector scoping, options education, setups for equities, options, crypto, commodities, buys and sells, charts, market discussions. And by the end of this session, okay, you will have a much better understanding of the current market environment. And if you do want to take it to the next level there, you can always join Matt. He's got a live training room, 9 to 5 the whole day. It's really cool. You should check it out. There's like a 30-day money back guarantee and everything. Mohammed is good to go. Jim is good to go. All right, folks. So we're going to get this thing started here. Just make sure that you stick around until the end because we will be giving you a live real-time view of Matt's live trading room. And on top of that, we'll have a little Q&A if anybody does have some questions. Let's go ahead and bring on the man of the hour here, Mr. Matt Maley. All right, I believe we have Matt here in the back. Whenever you're good.
Hey, Rodrigo, how are you?
What's going on, man? How's your weekend going?
Good so far. Long day, a long weekend, which are always nice to. But especially with this weekend coming up, it's going to be very interesting to see how things play out after what took place late last week. I always get a little worried when we go into a long weekend because it gives a lot of people to get nervous. It gives them more time to get nervous, and so we'll see if we get any kind of downside follow through on Tuesday, because obviously the market's closed here in the U.S. Tomorrow, and we'll see. But right. we'll get a little bit of a heads up because most of the global markets will be open, so we'll get an idea.
All right, so good stuff, man. There, and really quick for those that are just checking in here at Superior, what's going on, brother? For those that are just checking in here, or maybe you haven't, you're not in Matt's live room. Matt's been trading in Wall Street for about 40 years. He's been at Merrill Lynch, Salomon Brothers. Matt, if you don't mind just giving us everybody, just a brief background on your experience. You're on Bloomberg and CNBC all the time. So I guess it's important because a lot of people probably recognize you from some of these places as well.
Yeah, Rodrigo, I started on, as you mentioned, on Wall Street almost 40 years ago, be 40 years in November, at Solomon Brothers. And for those who are younger, don't remember that or don't know that firm, it was the trading firm on Wall Street for many decades. In the 70s, I wasn't there in the 70s, but I was there for 15 years in the 80s and 90s, and I worked right on the equity trading desk. And then I worked at Merrill Lynch for almost 10 years, for about 25 years in trading. Then I went to Miller Tabak, where I'm now, where I'm the chief market strategist. And unlike most chief market or strategists, I have the trading background, which most of them were either former analysts, a group was sector analysts or economists, whatever, and they really don't know. I mean, they focus more on the textbook, what the textbooks tell you should happen, rather than what's really happening and what's going to happen. And that just it's really helped me a lot. Again, when I worked at Solomon Brothers in these for 15 years in the 80s and into the 90s. I covered the biggest trading desks on the institutional side of things for those 25 years. And it was the biggest mutual fund in the world, the biggest hedge fund in the world, BlackRock, and many other big hedge funds and mutual funds, the biggest banks, insurance companies, et cetera. And again, you learn what's really happening, because the one thing that I've said, kind of my saying, is that the old saying on Wall Street is the market's always right. Well, that couldn't be more wrong. The market, my saying is, the market is only always right eventually. And we have so many different times where the market has been dead wrong. I mean, all I have to do is look at the overall market, forget about individual stocks, but the overall market obviously was dead wrong at the top of the internet bubble, and it was dead wrong at the bottom of the in 2009 when the crisis, the great financial crisis was ending. It was wrong to the other degree. It was wrong to the downside. Same with individual stocks. And that's, as a trader, we use not just a fundamental analysis, which is always important, but also use technical analysis very heavily, sentiment readings, positioning, etc., so we can see when the key turning points are taking place in individual stocks, groups like ETFs, and of course individual markets. And that's where we take the advantage. I mean, one of the things I've said for many, many years, that everybody says that Warren Buffett is not a market timer. He's the ultimate fundamental guy, which is true, but he is a market timer. He gets it when the market is flat on its back, or a stock or a market or a group is flat on its back. He comes in and buys it. No, that's not the only time he buys things, but that's where he's made his billions of dollars, is when nobody else was willing to buy. At key turning points, he's been able to come in and buy. And that's what we try to do on a little bit more active basis, because we do want that big, long-term, bucket of investment money that we have again, with the long-term 3, 5, 10 years or more horizon. But if you have the inclination and you have the time and want to do it, there's a way where you can really beef up those returns with active trading. And again, we have a lot of opportunities, and we've made some really good money this year. We're up many hundreds of percent. Of last time we're up 300%. It was more than 300%. It's got to be over 500% now. It's because we've had a great several weeks here. So again, that's my background. It's a trading background, and I still, again, fundamental analysis is very important, but I use all that trading thing to take care of, not sit there and say, well, just sit there and hold it. That's fine for your long-term portfolio, but boy, you can make some real good returns, additive returns.
Hey, Matt, so what's the difference here between, just for the folks that maybe have seen you on CNBC and all stuff, like just before we carry on here, because, there's a lot we're going to cover. And for those that don't know as well, like what's the main difference between something that you do that you can go on either side, right? Either on the bull side or the bear side, as a comparison to maybe somebody else that they could see somewhere that is only on one side and is rewarded in such sense. So I
hate to say it, but most of Wall Street is paid to be bullish. The vast majority of Wall Street, whether it be sell side analysts, it's like 3% of all of the opinions on all the stocks out there. There's like 3%. I kept the number, but it's low single digits of how many people have sell recommendations. Nobody has sell. It's either buy or hold, and they're paid to come in and tell you, oh, keep your money, keep your money with us. Don't sell anything. And I hate to say it, but sometimes with money managers, they do the same thing. But the key thing for us is that we can do it on either side, and we have the tools today to do it. In the old days, you did have some options, but they were all, the time value was it could be very expensive. I mean, if you wanted to make a bet today on the S&P, you'd have to go out at least, well, in this case, you probably have to go out just a couple of weeks because we do have an expiration coming up. But if you're in the middle of July and you wanted to make a bet, and by puts or calls, you'd have to go out 2.5 months. I mean, that's really expensive. Now we have all the major stocks have weekly options. Many of the intermediate size stocks have weekly options. The indexes all have options that expire 3 times, Monday, Wednesday, Friday. All the groups, the sectors, ETFs, they all have weekly options. And we can take advantage of it, like I said, on both sides, which is so important.
Right. So let's go ahead here, Matt, and start because a lot of the folks here want to kind of see how you're using this strategy in these markets. So if you don't mind, just go ahead, share your screen. And now, folks, what you're going to see are real trades that Matt does in the room, basically how he's able to time these things, right? So Matt, you'll take it from here, right?
Yeah, let me just get the share going. Hold on. Hopefully you can see that. Can you see that okay?
Yeah, it looks good. All right.
Okay, good. Well, let me pull up Bloomberg. Okay, now, I mean, I'm just going to tell you about what I'm going to show you a bunch of different things, and we've made some, but let's just talk about what we did this week. I'm going to tilt that up so you can see me a little better. I apologize. But literally, look at what happened here. We'll talk about both sides. Here is the TQQQ. The TQQQ is the, let me just here, is the ETF. It's the 3-timed leveraged ETF on the QQQ. And for those who don't know the QQQ, that is the ETF for the NDX NASDAQ 100, for the NASDAQ 100 index. And the NASDAQ 100 index is the top 100 stocks in the NASDAQ. Very, very highly concentrated in technology stocks, but a lot of other high-flying stocks. And this is a 3-time levered ETF, so you can really get some good juice when bang for your buck when the market is really moving. Well, here's what we did. This is just a one-day chart, but let's take it out 5 days. Okay, this is last week's trading. Okay, this is where we came in. I'm talking about both sides. Okay, we came in and we owned some puts. Okay, some puts going into the week. We already owned the puts there. And then we came in, I just want to make sure I have it right, sold them on Thursday. Okay, this is the TQQQ. This is not the option. This is just the TQQQ. Okay, boom. We sold them right down in here, right there. Okay, I just have to move this thing around so I can see it here. We got down 13%. 13% with the TQQQ was down. We had the puts. Okay, I just want to give you specific ones. We had the $28 puts. So we bought them when they're up, when the QQQ was trading up at 20. I'm sorry, up at 30. Sold it when it was below 27. Made, depending on where you had it, but I made about 300% on that trade. Okay, then, okay, and I just want to make sure I have the right timing here, is then we came in on Thursday, right in here, it was 11:36 to be exact, and we came in and we switched it up, and we bought the calls. I mean, I said, hey, we've real nice profit. We bought the calls. Guess what happened by the next morning? 8%. Well, you say, well, 8%, that's not as good as 13%, but 8% in an index in just, in just a couple of hours. It was basically the next morning we came in, and these things again were up 200%. So we had made 300% on the puts. On that same day we switched, bought the calls because I saw the market was oversold. I knew that the market, again, using my experience, I knew that the market frequently frequently rallies, and usually rallies in front of long weekends. And I knew the market was becoming oversold. This was a good time to come in and buy it. Sure enough, we made 200% because we were buying options that expired the very next day. These were the ones we bought several days later, so they were a little bit more expensive in terms of time premium, but we still made a real nice return. This one, we were up 200%. Some guys were up more than 300% because they held on a little bit longer. Actually, I will say this: I did hold on. I sold 40. I take it back. Let me take it back. I don't want to be okay. And then we sold more. Again, bang. Well, it was up about 10%. And then again, those were up 300% on the options. Okay, and just so we made 300% on one and combined average of about 260% on the other side in just a couple of days. We took on both sides when the markets gets really volatile like this, they bounce all over the place, and we could take advantage of it. Okay, and another example, again, just this past week, Nvidia. Here's a stock where a bunch of guys, now I gotta tell you, I did not own the puts. Other people in the chat room, and that's one thing I want to talk about. The people in the chat room are so great. We have such a great team there, a great group of people. And I had been negative on the stock, and I was worried about the stock. But earlier in the week, I took the day off on Wednesday. Okay, take my son back to college. It's great. So people had bought in the chat room. So it wasn't my idea. It was other people in the chat room to get short Nvidia. In other words, to buy puts in Nvidia. Again, some people were saying they made 500%. I didn't. I have to admit, I had nothing to do with it. So I don't. But there are plenty of times when people come in and say to me, hey, what do you think of that? What do you think of this? And I'll say, hey, that's really good. But I'm not going to play for one reason or another. Maybe because I have too much exposure in the market overall, and where the people, and one situation where people on Amazon, I'll show you a little bit later, made over 2,500% in several days. And I was like, they asked me what I thought. I told them that it was a great idea. I told them I wasn't going to do it, but they should go ahead if they wanted to. What an idiot I was. They made 2,500% on their trade. But the point was, at the same time, when we came in, remember I told you about, okay, I just want to go back. Well, I'll show it to you in a second. So Nvidia, we came in here, and the exact time, okay, I say 1:04 in the afternoon. We didn't get the exact bottom, but here is 1:04 right here. So we didn't get the exact bottom, but look at this. Stock up 5%. It's individual stock up 5%. Okay, in the next day on the opening, I'm sorry, take it back. I take it back because I want to make sure I'm accurate here. We bought them here, and I sold some of them at the end of the day. Okay, the stock was up almost 4%. We made about 150% on those call options. And I held on, but I held on to a good chunk of them, and we sold them the next day. The market, the stock was bouncing even more. I said, this is a little too much for me. We sold them right on the opening, again, up 300%. So these are the types of things that I've been negative. So I would say some people made it on both sides. I did not, because I have to be honest, I just wasn't in. I was not in the office that day. I was nowhere near the markets that day, which doesn't happen very often. But when you have family things, of course, you take care of family first, of course. And but the team got together, and we're providing all sorts of great insights. And that's one of the things, is that we talk all the time about what's working for us. What do we like here? What do we don't like here? Some people are doing, here I'm giving you examples of these were literally just day trades. They weren't even swing trades, but we like to do swing trades as well and go out further. With some of these puts that I own, the September and the TQQQ puts, we had owned them for over a week and sold them again on Thursday. I had bought some the day before. And some we'd owned for over a week. But these are the types of things we can play it on both sides. And profit in both directions. I don't ever claim to get the exact bottom. Well, once in a while you get the exact bottom. Once in a while you get the exact top. I can't think of a time I ever got both exactly the bottom and the top on one trade. You can't worry about that. People, if you miss it, I'm going to give you a bunch of examples that we've done where I've made 500-600%. If I'd held on a little bit longer, I might have made 750%. And if you're going to lose sleep over the fact that you made 560% on something and could have made 700%, you shouldn't be doing this, because you will drive yourself crazy. It's just too much to get the exact things. But it's like 500%, pat yourself on the back, home run, great, move on to the next thing. And that's really what we do. But these are the types of things. And again, just in the last week that we did. And I want to go back and okay.
Really quick here, we have somebody there. Chad he's from the live room. He's saying last week was awesome. We bought at the top, sold close to the bottom, then bought at the bottom, sold to the top. Guys in the chat are awesome too, but Matt's reads on the markets are okay. It's reassuring. So I mean that's but I don't know if you mentioned this, but folks, if y'all didn't know, Matt Maley has the record for the highest percentage trade win in the history of Benzinga, and before that he had the prior record. We're talking 5,000, 7,000, 8,000 plus % trades. That, like, I was getting some really funny phone calls that day. People just trying to show the love for Matt. So that was pretty interesting, right? Because there's only, I mean, you can't get that buying a stock, right? You just can't get those kind of things, right? So
Yeah, well,
I think it's an interesting way.
Yeah, let's just go over that trade that we made. We made. Let me just. I'm going to blow it up here so you can see it better. But this was, and one of the things that's important for you guys to know is that we talk about things, not just individual stocks, not just U.S. stuff. We do definitely individual stocks, ETFs, and some of these levered ETFs. I showed you the TQQQs that we did. We also do sector ETFs, the SMH, the KBE, the XLE. We've made some really nice ones. The XLE, which is the energy stock ETF, again, made money on both sides of that this year. But we also make it on the bond markets. We've made some nice money in the HYG high yield ETF, the TLT Treasury bond ETF, etc. But also overseas. Here is one, was the FXI, which is as you can see at the top here. This chart says last weekend's chart. That's because I did it in March. It was last weekend's chart in March. This is not last weekend's chart, but it's an old one here. But again, the FXI, and it's a large cap. And you remember what happened, if you remember last year, the stock market just getting hit, lower highs and lower lows for all year long. And the Chinese government was just clamping down on on many different industries. Started with technology, really went after Jack Ma, Alibaba, but moved on. They got whether it be gaming, they got their education sector, they got their when I say the gaming, I'm talking about the video gaming. Then you had, of course, the gaming industry was the casino gaming, whatever it was. They went every single month, and the market just started getting killed. Well, finally, in here at the beginning of the year, our government came in and said, well, we're likely to. The SEC came in and said we're likely to delist many of these names, and the stock market just fell out of bed. And look at what we used. And again, in this case, it was using two things. I'm sorry. One was technical analysis, and the other one was my experience. The technical analysis side of things, we looked at the RSI, and this measures when a stock is overbought or oversold. Here it was, every time it had gotten oversold, it got down to this 30 level. Okay, that's where the green line is, because it tells you, go ahead, buy, green, go ahead. When it gets to the red line, it's overbought. I mean, stop, don't buy anymore up here, stop. Okay, here it is. Look at it, it rallied, it got oversold here, it rallied, got oversold here, rallied, nice short-term rally for several weeks, on and on. Here, nice rally. Look at this one though. I mean, look how ridiculously oversold it was. It wasn't at 30, it was at 14. I've only seen one other example where anything that I have noticed, I'm sure there have been other ones, but one that I have noticed that was more oversold than this. So I said, okay, we got to come in and buy this, the FXI. We got to buy the calls on the FXI. But it wasn't just the oversold condition. I also knew that the Chinese government would come in and support their market. It wouldn't be just a one-day bounce. It would bounce for a couple of days and they would hold it up. So we came in and loaded up. And sure enough, boom, the next day we rallied 27%. 27%. That'd be like the S&P 500 or the Dow Jones rallying 27% in one day. Okay, so this was this huge rally. You see what happened on the index, and then whenever we do trades, we tell you exactly what we're doing. It's none of this. Well, you ought to think about buying some FXI calls here. Come in and say FXI. Okay, we get what the stock is, the symbol, the expiration date. You can see we bought it on March 15th, but the expiration date was March 18th. Strike price $30, and whether it's a call or a put, obviously. We bought them here, in about an hour to go in trading on the 15th. The next day it opened up over 1,000% higher. And I said, geez, usually if you're up 1,000% on an opening trade, I said, get out. It's 1,000%. Don't look back. I didn't on this one for the simple reason that I knew the Chinese government was going to continue to buy their market. This was not going to be one of those meme stocks that ran up a zillion percent and fell 2 hours later. This was something that was going to be supported by their government. Sure enough, when it got up about 3,000%, I said, okay, it's probably going higher, but I can't. We got to sell half. So we sold half. And then this is what my position. Not everybody does what I did. I'm just telling you what we did, what I did personally. And when I do a trade, you know about it. I don't give half of my trades. I give all of my trades. And then later at the very end of the day, just as we were closing up, we were up almost 8,000%. And I said, I got to sell the other half. This could be going higher, but I just can't. I'm not willing to take that chance. So we averaged over 5,000% on the position in just one day. Other people held on to it for a couple more days and made as much as 11,000%. One person said they made 14,000%, 14,000%. Now, as Rodrigo said, we had another one previous year. These are not ones we get every month, that's for darn sure, or certainly not every week. The previous year we got it in Viacom. It was a meme stock, and it was the same thing. When I get a chance, I'll show you the chart on that one, but it became ridiculously overbought. Now, Viacom doesn't exist anymore. They split off into Paramount and some other names, but it was one of those meme stocks in March of the previous year. And we went in and bought puts, made 5,000% on our money. And again, some people held on and made as much as 10,000%. But these, again, so these are just type of things that we're looking to do. Okay, here's another great example of what we did. Again, earlier in the year, this was in April, and I want to show you a few examples to show you that it's been consistent all year long. It's not, again, we don't get many 5,000% moves, but we do get some well over 100%. And like I said, you're up 200%. People said, "Oh, you double your money." No. 100% is double your money. 200% is triple your money, right? So anyway, here's something we made over six. Oops, this is the wrong one. What did I do with it? Okay, good. Well, we made 600%, which is great, but I just wanted to show you. I'm sorry here. Apple, here it is. In May, this was a 400%er, okay? In May, remember when the cryptocurrencies were getting crushed? And this, again, where my experience came in. I don't tap myself on the back. I'll separate my shoulder. I'm patting myself on the back so much. But this is what happened. I said, Apple Computer was getting killed. It was down 10% in like a week. And I'm like, there's no new news. The market's down. Sure, the market's been getting hit, but the market's not getting crushed. What was getting crushed was the cryptocurrency market. And I just kept saying, why is Apple down 10%? And then it dawned on me, because I'd seen this in the past. The cryptocurrency market was getting margin calls, and it's just not liquid enough. All these investors were not able to sell enough of the Bitcoin or Ethereum or Dogecoin or whatever they had to meet their margin calls. So they had to sell something else. I'd seen this before in the past. The biggest example was back when long-term capital management went under back in the late 1990s. And they were a hedge fund, and they didn't own many stocks. Luckily, they owned a lot of GE, General Electric, which at the time was the most liquid stock in the market. And so they just dumped that stock to meet their margin calls. And I thought to myself, this is what's happening this time around. They are dumping Apple Computer, because let's face it, these cryptocurrency players, these guys, they don't own General Motors or General Electric. They own tech stocks. And what's the most liquid and tech stock out there? Apple Computer. Microsoft, another one, but it's Apple Computer. That's one they have a nice profit in. It's liquid. In other words, they can sell it. There's plenty of liquidity in that stock. I can sell whatever I need to meet my margin calls. So it was getting artificially knocked down. Well, sure enough, on May 12th, the cryptocurrency stocks leveled off, and the cryptocurrencies leveled off, I should say. And yet Apple kept going down, and I realized people think something's wrong with Apple, and it's not. It's just selling that. So we came in at the end of the day, and I said, let's buy this thing. Sure enough, we bought the Apple May 13th calls with 1 day to go. And we bought them just after 3 o'clock. The next morning at midday, we sold them. Again, same thing. Apple will give you the exact stock, the expiration date for the option, the expiration price, the strike price, as you call it, and the call option. We made 400%. Okay, I didn't buy them at the exact bottom. I could have sold them, even made more money. I just said, oh my gosh, it's noontime, it's Friday, anything can happen. I'm up 400%. This is not, Apple sure as heck isn't a meme stock. It's not going to go up a lot higher in one day. This is again, these are the types of plays we called it, because I was very bearish on the market. And even though I think Apple is a great company, I was bearish on the stock, but I was like, wait a minute, 10% in just a couple of days for no reason? That doesn't happen to Apple. Something's got to be going on, and we figure it out and take advantage of it. Because what I'm saying is that I was bearish on Apple, not because I was bearish on the company, because I was bearish on the market at the time, and rightly so. But I said this has gone down too much. But I said, even though I'm bearish on the market, and even though I'm worried Apple can fall further over the next month or so, this is a great time to buy. We took advantage of it. Sure enough, it did roll back over later on. But even though the overall direction was down, we were still able to make money on the upside. And it's funny that at the same time, because I was like, well, wait a minute. If if Apple's going to rally, the TQQ obviously has to rally, right? So we went in and bought the same thing. Remember, it was May 12th, the same time, just after 3 o'clock. We bought the TQQQ May 13, $29 calls, sold them the next day at midday, up 600%. It's so, some of it's always easy an afterthought. But these are the types of things that we're trying to do. We're looking for all the time. And, I've got a million examples of these, and I don't want to bore you to death with them, but I do want to talk a little bit about what's going on. These ones.
Hey, Matt, really quick, before we do get into that, we have a lot of emails here from the viewers as far as like the chat room and joining the group there with you. Let's go ahead and go over some of these, Matt, and then we'll get back here into the session, okay? All right, so thanks for the questions here. So are the sessions on Tuesdays? Well, Matt didn't cover that, but there is a session every Tuesday from 11:30 to 12:30. It's just for the chat members. It's about 1 hour or so. He discusses trade ideas, all that sort of stuff. That is part of everything here, right? And you will get those recordings. So good question there. Next question here from Joanne. Does everybody get a free laptop? Yes, we're giving away free laptops. Anybody that joins will get one courtesy. Let me go ahead and just show you this really quick. All right, so everybody will be getting a free laptop, all right, that joins. And so good one there. Next one, what's the chat room schedule? The schedule is Monday to Friday, 9 to 5. Correct. Yes, 9 to 5. Correct. The whole day and the Tuesday session. Is there a money back guarantee? Yes, we do have 7-day money back guarantee on it. And the price at renewal is the same. So it will not change next year. We're not going to pull that Comcast move. Darla from the chat is on YouTube. What's going on? Saying, so glad I joined this chat. Never trade alone. That's definitely a great thing to add there, the community. It's amazing. Chad is asking if these are simple trades, not spreads or tick counts. Correct. These are simple trades, Chad. These are basic calls, basic puts. So these are not going to be complex trades. As far as the percentage, Jake, Matt's is up several 100% on the trade. So in the way that he trades, you're also hedging as well, Matt. So ultimately, it's just the percentage that matters at the end of the day. So how much is it? Oh, just to give the folks
I should have measured it before we came on here, but I know it's at least 500% year to date.
And you're not going all in on any of these
Never.
trades. You're going with a single digit percentage of your account under 5.
Right. Yeah. You make these. Again, when the market picks up, when things are kind of quiet, hey, great, we'll make 50% here, 20% there, 15, 80. But when things start to get really volatile, like they are now, and like they're almost certainly going to be in September and October, like they always are in September, October, you can make those much bigger things, much bigger returns. And if you have, it was funny because usually in the summer things get really boring, but this summer it didn't. And in this summer, of course, it was to the upside. The market was rallying. That's where the opportunities were in that direction. But yeah, we to say that we'll do that every year, I'm certainly not going to claim that. This has been an unbelievable year for us. But we try to use good management. So you want to have way more winners than you have losers, but you also want to make sure the winners, geez, we lost 20% on that one. We lost 50% on that one. Or, something, this is a real small one. I lost all of it. I don't care. It was so small. Right. I don't really
not all the trades.
The big ones are up 200, 300, 600%. And that's where
right. So not all the trades, obviously not every trade is green. That's pretty obvious. No, it's simply that the winners by far outperform the losers. Whoever tells you that they win everything is just lying to you.
Absolutely.
So,
that's the whole idea. Risk management and minimize the losses. And
Chad is saying there in the my portfolio is up 60% in 2 weeks. Haven't risked more. Yeah, absolutely. So, all right, Matt. So really quick, and we have a good question here in the chat. So is this good for people that are new or people that just want education as well?
Well, that's one of the things to do. I mean, but before I fully answer that question, I will give you just tell you more about what this Tuesday call is. We have a Zoom call, it's much like this one, and I try to make it educational. We'll talk about certain things on the educational side of things. And that's how I'll start off. It was funny because I initially thought, oh, yeah, this will be a Zoom call. We'll go 20 minutes and we'll just kind of talk about what's going on right now and some of the picks we have outstanding, or some of the ones we're looking at. And we do that. And I also wanted to have some educational stuff in it. We'll talk about what is the head and shoulders pattern? What does it mean? Those types of things. Well, it's turned into an hour-long meeting, and I'm very, I love the markets and very passionate about the markets. So, you give me an audience, I'll talk forever. But so that's what we do on Tuesday. Tuesday is at 11:30 Eastern time. It goes usually about an hour, sometimes a little bit more. And it was funny because last week I was like, the last week of August, this will be a short one. Well, no, it was obviously an exciting week. So we just kept going. At the same time, if there's nothing really to talk about, I'm not going to bore people just by going for a full hour. If we only have a half an hour to talk about, if there's only, things half an hour to talk about. But that rarely happens, especially in this kind of time frame, in this time of marketplace, I'm sorry. So we talk about those things every single week. And again, I just try to talk about things that people, geez, this makes sense, but it's not how the market works. I mean, and there's certain things that would just be convoluted. Well, everybody's buying it. That's good. Well, no, that's actually not. It depends. That's good. Yeah, if a lot of people are buying something, the momentum is going to take it higher. But when everybody's buying it, everybody's bullish, and sentiment gets too bullish, and the position gets too long, too many people own it, there's nobody left to buy. That's when you want to make the short. And so we talk about those things that don't necessarily make intuitive sense to most people, but they're not hard concepts. It's just a matter of learning them. And so I spend a lot of time on that. And when it comes to the actual trades, I don't do a lot. There are some people who are in the chat room who do sophisticated trades, and they're doing iron condors and spreads and things like that. And that's fine. I once in a while we'll do for hedging purposes, especially, we'll do some strangles or some straddles. For those who don't know what those are, it's basically what you do is you buy, you think, hey, geez, the stocks move to a certain point. It's either going to break out big time and keep going, or it's going to fail and go on. It's not going to go sideways. So what you do is you buy both a put and a call with the same strike price and the same expiration date. And you know that, hey, I'm going to make a lot more money on the one that wins than I'll lose on the one that doesn't win. And besides, you'll be able to, even though you sell at a loss, you'll be able to get out of it before it goes to zero. And you just make this huge run. Now, of course, there's risk involved, because if you're wrong and the stock just sits there and does nothing, you lose on both trades. So there's always risk, of course. And a strangle is very similar. It just has different strike prices. So it's the same thing. But the point is, what we'll do is that we'll have something, again, when we think something's going to see a big move, or if we already have a position, it's like, hey, it's technically not, I guess, a straddle, but you say, hey, or strangle, but hey, I own the calls here, and I think this thing is really going to break out. But if it doesn't break that level, the bulls are going to throw in the towel and the stock's going to go down. So I'm going to buy a few puts here to hedge myself and therefore guarantee that my gains that I have so far are going to hold. So things like that we do, but we're not overly, again, we're not doing iron condors, a lot of things. So if you're new to the options game, you can kind of work your way into it. Start small. Like I said, I never, ever, ever, well, I say ever, I almost never put more than 10% of my holdings in any position. Once in a blue moon, and I can't remember the last time I've done that. But so I don't want to say never, but very, very, very infrequently, because the options, you can make those big moves, 200, 300, 400% in just a few days. Yeah, you could make a lot of money. You got more money than you would if you only put in 10%, but boy, if you can lose it all, and that's not, technically you could lose it all very quickly, and you could lose a lot of it very quickly. So that's just the way I do things. But other people might do it differently. But again, I try to keep it towards, people start with very small options, just buying one or two options each time, or in very small amount of money, or you start off with paper trades. Just say, hey, just literally write down a piece of paper. That's why they call it a paper trade. I bought the Apple calls. And you didn't really buy them. You just said, you mark the time, and then you say, okay, how much money did it make? Or how much did it lose? It's like, oh, I'm losing this. I got to get out. And that's one of the things we try to do. People constantly say, hey, Matt, I bought this yesterday. It's down 15%. Do you think it can bounce back? And I'm like, just take the loss, move on. Or you say, something's up. Geez, I've made a real good thing here. I'm up 150%. Well, why don't you, I'll say, why don't you sell half here? and hold on to the rest of the options. Because now, if it's up 150%, you sell half, you've already got a profit. If it goes to zero, which you'll sell it before it goes to zero. If it goes back down, you'll sell it at some point. If it goes to zero, you'll still have a profit. So why not just take some? Again, risk management, you're always working for that. Look at those meme stocks. If people are like, geez, they were up a gazillion and then the next day they're down a gazillion. We don't want to do that. So again, there's a lot of educational stuff for new people who are new to options and kind of work their way through it. And the one thing that we do try to concentrate on is there's no such thing as a stupid question. People ask at any time, and not me and everybody else in the chat room are incredibly helpful, telling people what they think and what they their opinion. Again, it's the great. I wrote it down when Rodrigo mentioned. A lot of people say this all the time in the chat room. Is something I believe in. Never trade alone. You have people. At least you have an opinion. You don't have to follow everything I do. You don't have to follow everything that everybody else does. But you have ideas and you ask, "What do you think about this?" You know something? I don't really like that. I mean, I know everybody's hyping it, but I don't like it for that reason. Or it's like, yes, I really like it. It's up a lot, but I think it's got a lot further to go. And and people are throwing in, and people are not afraid to say, hey, I don't agree with that. I know you're bullish, but I'm bearish. And so you get a good feel for what you're doing.
That's probably like the biggest problem with retail traders, Matt, is that they are vacuum trading. They're trying to do this on their own, off the cuff, trading while they're waiting for whatever it is, taking it, but it's just a lot different as well when you're in a community, in a group. That's why when you go to the gym, whatever, they're like, pick a buddy or whatever, this is like more than that. This is an entire community that's there to help you and make you succeed, right?
Absolutely. I mean, that's maybe the biggest, well, I think the thing is, it's not, they're really good people who care. People care about the markets. People are knowledgeable about the markets. People are willing to help other people who are less knowledgeable, because a lot of it, we all know that the market, some people on Wall Street try to make it a lot more confusing or a lot more complicated than it really needs to be. But I don't care how smart you are, if you've never been exposed to it, you can't know it. So that's what we try to do. We try to tell you, it's like, well, yeah, I know this sounds crazy, or this sounds like this is what you should do, but this is what, and you learn how to play it, and you have many different voices, and it's okay to disagree. But that's the one thing that we do, and many times it's like people will say this, and this, and I'll say, oh, wait a minute now, that's actually not the case. And people will say that to me. Oh, wait a minute, that's
real-time education. Real-time education.
Exactly.
The other thing is that whenever the Fed has never been more relevant, and there's a lot of people who don't even know what the Fed is or what they do, right? So you provide not only a lot of live trading, but you provide of education, insight into what's really happening. Obviously, we're all aware that it's really hard to trust cable news, mainstream media. That's why if you have Matt Maley, you get his unbiased opinion and all this stuff in the chat room. But I want to give a big shout out here to Monica. Welcome to the family, our most recent member.
Thanks, Monica. Great, welcome aboard. I think you'll really like it, and we're going to come right out of the chute on Tuesday, and we're, it's going to be. I think there's going to be a lot to do, and I don't want to promise anything because you never know. But the chances are very good that we are going to have a very interesting day. Now, and in fact, I just want to talk about one of the things that's coming up this week, and it's the Apple launch. Now, their new iPhone. They're also, I guess, their new laptop. I guess there's going to be a couple different things that they'll be announcing. That it's kind of funny because all of a sudden they've been talking about the new iPhone, but now, literally just this week, and they're saying, well, we got a lot of things we'll be talking about. So I'd be interested to see what happens if this iPhone.
No, it's really, really important. I think it's important to notate that, at the same time, you're also trading Fed events, you're trading earnings, you're trading everything that like stock splits, acquisitions. And here's really why I think there's an extra value there, because, we are going through historical times. What we're seeing right now, we have never seen this in the history of the world in our existence. So applying your 40 years in Wall Street, dissecting what really is happening, not what you're looking at on the news, but what's really happening behind the scenes on your experience. it's not just education, but this is something that somebody can use, not just if they're trading options, but if they're buying stocks, because
Oh,
I
absolutely.
mean, you're an analyst, like you're like the guy there. So they can ask you like, hey, Matt, what are some stocks that I could buy that maybe have good free cash flow, good operating margins that I can hold for my kids' college fund or something like
Right.
that, you know?
Oh, absolutely.
So that's really something important that you can actually do. You can flip because you were a trader, you're an analyst, and most people don't have no clue. That's why your background is so interesting for the chat members.
Yeah, it's very unique. I mean, and that's what I've, again, it's helped me be, really help this chat room to be so successful this year. And it's one of the things that, you look at things like a week ago when Chairman Powell came out and people were saying, there's no way he's going to be hot, he's going to be dovish. And I said, no, not this time. And we made some nice bearish bets. And again, this was I talked about a couple of trades we did last week. The week before, we made some really nice trades because I really strongly felt that he would be, for a number of different reasons, thought he would be quite hawkish. He was, and the market got hit hard. The Dow Jones Industrial Average fell 1,000 points, and the Nasdaq was down 4%, which meant that the TQQQs were down 12%, and we killed it. I mean, we made again. Several 100% moves, and that's because you have to look at the whole picture. Some people only look at technical analysis. That's fine. I don't. But technical, and of course, technical analysis is really fundamentally based, which a lot of people don't understand. Number one, but also sentiment and positioning. And all of these different avenues are so important to be used collectively. Too many people try to use just one, or one or two, and we try to use, or I try to use all of them to really pull things together.
So before, okay, so really quick here, we have Mohammed Babar says, this is my biggest gain in trading with Matt Maley, Inner Circle Chat. His time-sensitive info, without him and others in the chat room, I would have blown up my account listening to the news, which is a pump and dump. He also responds to your personal questions regarding your underlying equities. Yeah, Matt does go above and beyond, that's for sure. But really quick, Matt, before we do get into all this stuff, you're a career man, right? You've been in Wall Street all your career there. Some news came out that the Bed Bath and Beyond CFO jumped from a building.
I heard that.
What's the situation with number one? We feel very sorry for him and his family and all that. But what's really going on there?
Well, this is it's obviously sad. I don't obviously I don't know. I mean, I know the details that he is the person who did jump out of the 60th window of I'm sorry, the 29th floor window and died. And he had just sold within the last week or two many millions of dollars of the stock, and I'm pretty sure it was in, here's Bed Bath Beyond, the chart on it. I'm pretty sure it was in this time frame. I don't have all the details on it because I just heard about this morning. I'd heard people knew that somebody had jumped out. Nobody knew who it was, and I read this morning. Again, it's a very sad thing, but man, something's going on there when he's the CFO. When the CFO, and they filed to sell some stock. He sold stock. I don't know what was going through his mind, and then maybe the speculation, of course, is that he sold at a certain time that might have not been great, and that maybe there was something going on. I don't know, but when you get a stock that goes up, well, just all I have to do is look at this. I get rid of some of these charts here, and I'm not, I don't know the person. I'm not going to start to say anything about him. I just don't. But look at the stock. You get a stock that goes up, over 500% in just a couple of days, and then falls, bang, 60% in a couple more days. It's all over the place. None of this had anything to do with fundamentals. There's going to be, and there's some people who made a lot of people who made millions of dollars off this trade. I was one who said in here, I said I wouldn't buy it at all. And some people bought some puts. I did not, and made some real nice money. It just made no sense to me when the stock was up here. But this is the type of thing you got to steer away from. we've made some money in Bed Bath and Beyond this year, mostly betting it on the negative side, because when it got up to be these big spikes for no reason, I knew they had to come back down. It was a sign of an unhealthy market when you see these kind of moves, and then you see this tragic thing happen where the CFO jumps out a window. That's that is not good. This stock, I would assume, is going to open up significantly lower on Tuesday. It's just really, really sad.
Yeah, I don't think I've ever, I mean, who knows the situations behind this stuff, but it's just one of these meme stocks. And I mean, kind of like when that Robinhood, well, never mind. But anyways, so we have a question here from Usman. So Usman's asking about a broker in UK. So Usman, in the chat room, we actually have a great community there of folks that actually are from around the world, right?
Oh,
Matt, you have people from Finland, Australia, Canada, everywhere, right? So we have people that are trading and they all use different brokerages. And so I think it would be a better place to ask it in the chat room. I don't know if Usman is a member, I think, but yeah, that's really one of the things that you can do, Matt. But yeah, go ahead there with your analysis and any questions, folks, in the chat.
Yeah, the one thing that you mentioned that was that I think is very important to talk about right now, and this is the people, the market's rolled back over here. We've seen the second leg to this bear market, which I think we are, and I think that we are going to test the June lows, and I think we'll likely undercut them. But we can go over why I think that, and I will. But the thing is that we do have to remember is that in these bear markets, you have these bear market rallies, and everybody's talked about those. But the key thing to remember is that the really, what hits the fan in the second leg. In the first leg, you get companies that holding on by the skin of their teeth, holding on to these are honest companies, whatever, and but the business is tough, and then finally the next leg goes down, and they're exposed, and they're like, oh my gosh, these guys are not going to earn anywhere near what we thought they were, and even though the stocks are right down 50%, it's going down a lot more. But it also exposes fraud. I mean, then you get, I don't know if that's the case in Bed Bath and Beyond. All I just know is that back, the dot-com bubble, we had Enron, you had WorldCom, complete frauds. Of course, during the crisis, in the great financial crisis, 2008, Bernie Madoff, he was exposed. So as Warren Buffett is famous for saying, in bear markets, that's when we find out who's been swimming naked. And that's what happens. So it's not all just the scumbag things, but we also have leveraged or hedge funds, which are highly leveraged, and they barely get by. They kind of deleverage the forced selling, but then it's that second leg of the bear market. That's when those get exposed. That's when they have to liquidate. It's one thing if a hedge fund closes. If a hedge fund closes, it's not a big deal. It's like, okay, we've lost money, we're down, whatever reason, we're going to return money to our investors, and we're going to close our shop and start a family office. That's fine. They'll take 2 or 3 months to liquidate their portfolios and send the money back. That plenty of time. There's plenty of liquidity. But when you have a liquidation, when a company is they're going out of business and they have to sell everything now, forced selling, margin calls, etc., that's when things start to get ugly. That's what happened with long-term capital management back in the late 1990s. So we're heading into that time frame. But not only that is that people realize, oh my gosh, we are going to have a recession. People keep talking about a soft landing. Soft landing is possible, but not very probable. You cannot go from massive levels of liquidity that were provided in QE. It was the right thing to do. The Fed, everybody agrees the Fed did the right thing. The problem is they kept the liquidity on too long. So they did the right thing, added all this liquidity. Whenever they took away that liquidity, the market was always going to go down, always. And we were always going to see a slowdown in the economy. But the problem is they let it on too long, so the slowdown is going to be even worse. But more importantly, we've also now had this war in Ukraine, which has exacerbated inflation, which means the Fed has to be not only tightening to get rid of some of that excesses that they gave us in order to save the system in 2020. Now it's going to be worse because they have to keep interest rates higher for longer. We are almost, I believe 95% chance we have a recession. And it's not going to be a mild one. It's going to be a rate. It doesn't mean it's going to have a like we had in the Great in the Great Financial Crisis.
Well, Matt, aren't we supposed to be? I mean, I know they changed the definition of this, but like, aren't we in a recession with the GDP
No,
contract?
I mean, technically, it's funny because these people try to fight it, and I saw it all day Friday in the network newses. I'm sorry, the financial newses. They're all arguing: are we in a recession? Not in a recession? Who the hell cares? It doesn't matter. We're headed for a significant further slowdown. Earnings have to come down, like you said, Rodrigo. Yes, technically we're in a recession because we had 2 quarters in a row of negative GDP. By that standard. I mean, but the real problem is that when we actually know when we really know that everything that it is a recession or it was a recession, it's either over or already well into it. It doesn't matter at that point. What we know now is that the Fed is going to keep interest rates higher for longer. The Fed is just now starting to get involved in QT. In other words, shrinking their balance sheet, and so the valuations have to come down. All these perma bulls, these people are paid to be bullish, are still trying to say, hey, the valuation levels that exist when you have massive QE programs is what we're going to. You can't, it doesn't happen. People forget, and a lot of people don't even know. The same thing happened today. I'm sorry, it's happening today that happened in 2000. In the late 1990s, let's see what just happened. In 2020, the economy, global economy stopped. I mean, for all practical purposes, stopped. Everything shut down. And the market shut down, especially the fixed income markets. I'm telling you right now, I am not exaggerating, the system was about to implode, just in the way it was in 2008. The difference was, it wasn't because the banks were doing stupid things, it was because of a pandemic. It was nobody's fault. So the Fed came in and provided this massive levels of liquidity that took everything straight up, and it led the market put it on steroids and let valuations get way up there, 22 times earnings. The same thing happened in the late 1990s. A lot of people don't realize this. The Fed and all the global central banks flooded the system with liquidity because of Y2K. Y2K was because all people, if those who aren't familiar with it, that in the year 2000, all the computers in the world were going to go double zero. It was going 97, 98, 99, double zero. The problem is the computers were to see double zero as 1900, not the year 2000, and that meant that everybody's money would have disappeared. They had to fix it. They had to put enough money into the system, and it was there for several years to fix that situation. It was, in other words, it was not a coincidence that the stock market topped out at the very beginning of 2000, a month or two after they realized, yep, we fixed it. We did it the correct way. This market, that we're shutting off the liquidity spigots. And sure enough, yeah, people say, oh, wait a minute, the S&P didn't top until the fall of 2000. Yeah, that's right. But the NASDAQ topped in the first quarter of 2000 once they shut off the liquidity. Boom, got slammed. That's what's happening now. They provided all that liquidity. They cannot keep it. People keep saying they can't do this. They got to go back. They got to pivot. What? So we can go to 30 times earnings or something? The market has to be allowed to trade on its own. The Fed knows this. Okay, this was always going to happen when they got us addicted to steroids. They got us addicted to liquidity. Now, and they know that doesn't work over a long period of time. Now they're going to have to take us off it. It's going to be painful. That's why Chairman Powell said, sorry, basically said a week ago, we're going to have a recession. It's going to be painful. Why people don't want to believe it anymore, I have no idea. He's telling you right. He couldn't be more.
So all these growth numbers and things like that basically were just pumped by the Fed. But anyways, now look, we have here Chad saying Powell said there's going to be pain in households coming. I remember here, Matt, when now you see it all over the news that this will happen and such. I remember maybe about 3 months ago, 2 months ago, we were talking about this particular. We're talking about banks, rates, households, the housing market. It kind of looks strong on the surface, but now it's kind of cracking down. I don't know if it's the last market to fall in a recession. I don't know how that works, but what is your take right now on the housing overall?
Yeah, I just say, to start, the way I'm going to start answering this question is this thing that you talked about the banks. And back in 2016, the bank stocks started getting hit hard. And people were worried again. It's like, oh, are these banks in trouble again? It's only been 5 years since the crisis. And Jamie Dimon came in. The market was down. Stock market was down 13%. And Jamie Dimon came down and said, everything's fine. And he put $26 million of his own money into JP Morgan stock. This was not a company buyback. It was his personal money. This time, in the spring, late spring, he said, the market's down 13%. Banks are fine, but he didn't say I'm buying the stock. He said, batten down the hatches. A hurricane's coming. You better be careful. Right? This is the most important business person in the world, and he's telling you to be careful of a hurricane. Again, he couldn't have been more right in 2016 when he was bullish. Now he's obviously doing just the opposite. You need to heed that. But again, I don't want to say the world's coming to an end. It's just we need to go back to a situation where we're trading on fundamentals and trading without the steroids of the Fed, and that's going to be a painful process. When you get addicted to something, to get clean, it's hard. It is what it is. But to go back, what Rodrigo was asking about with just the housing sector, it's. Again, I'm not calling for the end of the world here, and too many people, I believe, are saying that that this is going to be, it's going to collapse like it did 15 years ago. I don't think that's going to happen because they're just supply demand isn't the same way. Number one, in other words, the big problem is there's not enough supply out there, and that's not going to change anytime soon. It doesn't look like, and we don't have people buying all these houses with 5% down, and if the price of the house goes down at all, they're screwed. I mean, it's just the people still putting 20% down, a lot of cash buyers, etc. But you don't need but the problem is it is slowing down. I mean, look at those new home sales that came out last week. I mean, let me see if I can pull it up here while we're talking here. I just want to show you the new home sales. Only take me a second here. Let's see if I can go back to 08 25. Okay, let's see, where were those new home sales? But the point is that the home, housing is incredibly important to the economy. Why? Because it's a huge amount of jobs, right? But also, when people buy a new house, they get a new air conditioner, they get new dishwashers and they get new refrigerators, etc. Where is that new home sales? Okay, I'm going too far. Here it is. Gosh, did I miss it? Okay. But and so this is going to, so it is slowing. I wish I could pull this up for you. I can't see it on my, there's pending sales. Okay, new home sales. There we go. Look at this. Look at this. See how nice trending upward for a full decade. And then the big spike then, and then slam-a-dam-a-ding-dong. Remember, this was the big spike because everybody wanted to move it out of the cities to the suburbs. And okay, we're going to stand it. It went back down to kind of the pre-COVID levels, back up, and then slam. Okay, that is not good. That's not good for the economy. Like I said, people, again, it's not just buying houses. It's electricians when they're building new homes. Electricians, plumbers, carpenters, etc. They're all being employed. When there's few of them, less of them are being employed. But it's also people buying refrigerators and new computers because they've been using a laptop. Now they need a desktop, etc., etc. This is not a good thing. So to answer Rodrigo's question, I do think it's going to slow down. I think it's going to be a problem. I don't look for the crash. And when I talk about this stuff, when I'm concerned that we're going to hit new lows for the market, this is a normal and healthy process. I hate to say it, but it's going to be a painful one. And you don't need, back in 2000, when we were facing a very similar situation, we only had a very mild recession. I think we'll have more of one this time because there's so much debt in the world, so much more debt, corporate debt out there, that you're going to have some more problems. But it doesn't mean we're going to have a horrible one like we had in 2008. So to answer your question, yes, I think housing's a problem. This is going to be as interest rates move higher, which they look like they're going to do. We got problems. We can look at
So corporate debt is higher now than it was in 08, but 11 trillion. And you see that chart, that's really interesting. All that stuff you get on Bloomberg, it was literally like at 2007 levels, like 2020, the price there.
Right. Yeah,
It went all the
these.
way
I
up.
mean, obviously, back in when we had the bubble, it got ridiculously out of control. In 2005, let's see if I can see it there. You see how 2005 it was even higher, but you can see that.
By the way, folks, all this stuff that when Matt does his research as an analyst, which for y'all to know, basically Matt, Miller Tabak, they have institutional clients. Matt provides them research. You're basically getting this stuff in the chat room from like as a retail trader. You're getting like basically like this sort of research, but applied to direct trades for everything that you're looking for, swings, but mostly we're focused on like short-term trading. But you don't get access to Bloomberg, but when Matt is able to do his research and all that, he will point out certain things like, if he sees some unusual options, right? Things like that. I know you did something like that with Ford one time, Matt.
Yeah. Oh, yeah. Now you see, because you see these strange trades, and this is going to be interesting. You see these strange trades. And suddenly, somebody just bought a boatload of Ford calls. Well, they're about to report. What do they know? People don't spend that kind of money. Somebody just bought $1 million. It'd be a hedge fund, or it wasn't individuals. I say somebody, I mean an entity, some hedge fund or something, just went out and bought $1 million of Ford Motor call options that expire in 3 days or 4 days, and they report the day after tomorrow. What do they know? Nobody would do that unless they knew something. All right. So then I said, well, let's piggyback them. I don't know why it's going up, but let's piggyback and we'll jump on in and we go ahead and buy the stock. It's interesting when you say this is the SMH, but
so you have, just for folks here, remember, you basically you can spot institutional, big institutional trades, right?
Yeah, we'll look at the like here we had. I just look at the most active trades in any given day. Frequently, they're in the big, the SPY, which used to be. But listen, somebody was buying triple M calls on Friday, 3M, right? What's going on with that? I mean, I would have to go again. Sometimes it's just there's some kind of an odd thing going on. But here's a stock that's down. Look how oversold it is. Triple M. Somebody's buying a lot of calls in this name. Why is that? Something's going on. So this is one we're going to be looking at next week. Let's see here. We'll just make sure if I got it. Yeah, they're going to September 16th, $200 calls. What's going on there? I want to find that out. And that's what we're going to look at next week on Tuesday to see if there's something where we can make some money. I mean, $200 calls that expire in 2 weeks. Stock's trading 120. What's going on there? So I have to investigate too and see if there was a big print and find out, what was really going on. Because sometimes they're not as compelling as you might think, but something that we try to monitor all day long. What is going on? What's trading the most? Apple obviously. Some of these you can kind of throw out because these were the SPY ones that expire, almost immediately. It's just a lot of people putting on hedges and things like that. But it's a very helpful way to see things that maybe that most people aren't seeing and check it out. Again, we can piggyback it if we see a big trade, but we also can it highlight. It's like, oh, someone just been a big trade. The stock's getting really oversold. What's going on there? And it gives us ideas. And sometimes we look at it and go, I don't know what's going on. I don't figure it out. I'm just gonna stay away from it. And we miss trades doing that, but more often than not, we miss getting our heads taken off. So, but yeah, keeping an eye on active trading is active trading in the options market is something that works very that can be very, very profitable as long as you get an idea of what's really going on. But again, just on the overall market today, I it's funny because I was on Bloomberg TV on Wednesday and talking about in a pretty bearish way, and on Friday I was on CNBC, but that was different. We were talking about some specific stocks, but we were talking about the ARK. Boy, I just Kathy Woods, boy, she's had a big outflow last week. She's a very smart person. She's had a lot of great success. But the problem is she put so much of her faith in these innovative companies that moved a lot higher than they would have because of all that excess liquidity that was added to the market from March 2020 to the end of last year. Now that liquidity is no longer being pumped in. And now the QT, now that they're going to be shrinking the balance sheet a lot more, because remember, they were during the summer, they were supposed to shrink it by $47 billion a month. Now they're supposed to do it by $90 billion. They're going to double that starting now in September. So without that liquidity, a lot of these names just got pushed too high. And you think about, what are you talking about with that liquidity? Well, it had it's that when the Fed goes out and does something in the open markets system, they go out. What they did with that QE programs, they went in and they bought all these bonds. And if you're a member of, if you're a member of the primary bank, and you're a member of the Fed, they come in and buy something or sell something. You have to do what they do. They came in and said, we want to buy. You had to sell them. So you sold them. You got all this money. Well, what did you do with it? And in some cases, you loan it out. That's the whole idea. We could loan it out and help the economy grow. But in some cases, it was like, well, especially after the economy got back on its feet, they're like, well, we still have too much money. What are we going to do with it? We're not going to let's sit here in our vaults. We're going to buy stuff with it. And that's what they did. And that's what pushes the markets to crazy heights, because they have no place else to go with the money. They put it into the market. That's what happened in the late 1990s. People think it was a new economy. No, it was Fed liquidity that made that rally. And it's Fed liquidity that pushed this rally way too far this time around. We need to have that thing readjust. And the ARK Innovation Fund, I think, is going to be one that's going to get hurt. I mean, a lot of the companies she buys are going to do very well over time, but they still need to settle back in to a level that is more commensurate with their, everybody's willing to pay for these innovation companies. That's fine. You're willing to pay a higher multiple for that. That's fine. And you should, but they've just gotten too high, but people started to believe. And that's one of the biggest problems. People saying, well, geez, we're going to have a recession, a mild recession, a 25% decline in the market, or the 20% decline in the stock market. That ought to cover it. Well, that's not, because we didn't have a normal thing going into it. The stock market didn't get ahead of itself because the economy overheated. It got ahead of itself because of all that liquidity. So that when it comes down, it's got to come down more because that liquidity is being taken away. If the stock market, if the Fed had, I guess my point is we were always going to get, the stock market was always going to get down towards somewhere, somewhere near 3,000, 3,200. And the problem is because it got pushed so much higher, it's got to come down a lot more than it would have if the Fed had pulled in their horns earlier than they did last year. So we can still blame the Fed, but the fact of the matter is, stop worrying about inflation. If we get peak inflation, who cares? It's going to stay elevated. Either way, we have supply-driven inflation. No matter how much demand destruction we do, it can only come down so much. Until that war in Russia ends, the sanctions are going to be there. That's going to remain high. It's just what happened in the 1970s. Supply-driven thing. Back then, it was the OPEC oil embargo. Demand destruction did not? It takes a long time for demand destruction to really have the major impact that some of the bulls are looking for. And they're comparing apples to oranges. You can't hit, and it's like you can't have a situation. They want their, they have their cake and eat it too. It's like, how can you knock down demand? How can you, kill demand destruction? How can you engage in demand destruction in a material way that causes supply-induced inflation to come down and not hurt this economy? It doesn't make any sense. These people, you can't like, okay, well, great, you get demand, everybody's going to stop buying these things, but that's bad for the economy. So earnings are going to have to come down. So that market, which is trading at 18 times earnings right now, and really should be trading at 15 times earnings, because if you take out those, everybody talks about 17 times earnings for the average. Now, if you take out the 2 times when liquidity skewed the readings, and back in the late 1990s and in the last couple of years, the average is 15 and a half. And every bear market since World War II ended with the market going to cheap territory, undervalued. They didn't stop at fair value. So, but even if it stops at fair value, you got to take the market down to 3,300 on the S&P 500. That's obviously well below the June lows. It's going to provide an unbelievable buying opportunity. But like I said, we're heading towards the second half of the bear market. The second leg of the bear market. And that's when everybody explodes. That's when the companies, the honest companies that are struggling, they either go out of business or their stocks have to go down a lot further because we realize that they're actually in worse shape than we thought. Then you have the guys who have been cheating. Then you have the over leveraged guys again. And these people, that's what happens. It takes time for these things to happen. It's always that second or third leg. That's what we're heading into now. September, October. This is the time where this liquidity is going to be. It has been an unbelievable year for traders. This next 2 months should be maybe one of the best all-time periods for active traders in history, in my opinion.
Right. And it's just, I mean, we're looking at the numbers on the surface, we can assume one thing, but then like we still have had several bankruptcies from big companies. Like I remember Toys R Us. I don't know if it was JCPenney or Macy's. I don't know. Like you see several of these big brands. I don't know. I'm seeing some cracks in the economy ever since the COVID whole thing started. Some businesses are kind of staying afloat. Recently, you've seen a lot of things with these Bitcoin, like these Voyagers or Binance, that kind of, or the Luna things. You're starting to see cracks in different. I mean, that's just what I'm looking at overall. But I think it's interesting that you help everybody kind of follow that stuff. But it's just, I don't know. I do feel that there's still pain in the economy, even though maybe the Fed might think we have a strong labor force or whatever. Yeah.
The thing about with the Fed, and you have to know, is first of all, the Fed is not a government agency. Okay, so they keep trying. Some of these pundits keep trying to say that. It's just not. I mean, it's fact. And if you're not sure, just call them or contact them and say you want information under the Freedom of Information Act, and they will politely tell you we do not fall under the Freedom of Information Act because we are not a government agency. They will flat out tell you that. Now, people say, no, yes, they are. The Senate confirms all these people, and they are chartered by the Senate, but they are owned by the member banks, and their job is to make sure. What did they do? Did they save the system in 2008? Well, they saved the banks, which saved the system. I mean, the same thing happened to the ECB back in 2011 and 2012. The ECB, the European Central Bank, so everybody said, well, they bailed out Greece. They in the EU bailed out Greece. It's like, actually what they did was that every single one of the European banks was loaded to the gills with Greek debt because they paid high interest, and so what they really did is they bailed out the Greek banks. I'm sorry, they bailed out the European banks because they had to, because too many of them would have gone under. Deutsche Bank would have been, the biggest, most powerful bank in Europe, gone if they didn't bail out Greece. And so so remember where they're really coming from. But I mean, I don't want to badmouth the Fed. There are certain things they do that are very important and very helpful. Right now, though, people keep trying to get them to say, just go ahead and flip. It's like, no, just stop raising your interest rates, so inflation keeps getting worse. It's like, great, we're going to have a recession, but you want to, stop raising rates. That's what you get. These politicians keep, especially on one side of the aisle because they're in power, keep saying the Fed's pushing us into recession. They know we're going into recession. What's pushing us into recession is inflation. Now, who we can blame a lot of different people. Maybe it's them, the parts to blame for, certainly the government for having so many fiscal programs, whatever the inflation, the money supply, et cetera. This inflation issue is if they cut rates, especially if they go back to QE, inflation is going to get worse. That's not going to help. I think you say, well, stop raising rates. That'll help the economy. It's like, well, for a very short time frame, it should help the market a little bit, but that's going to be inflation. You have to remember what happened when inflation is bad. Okay, it's bad for earnings because at some point companies can't pass it on to the consumer. Consumer starts making less money because they're spending all their money on food and energy. Okay, so they can't spend it on anything else. It's crazy. It needs to be done. It's okay to be done instead of worrying about it and profit from it. It's people, and I don't want to say it's inevitable, but it's the chances of the markets going down further, I think, are very high. I think most of these guys on Wall Street are in la land because they've convinced themselves that the market was actually at fair value at the end of 2021, even though it was trading 20 times earnings, 22 times earnings, and 3 times sales. 3 times sales, you can't fake sales, okay? Now you can play around with earnings through charges and things like that. So the PE ratio can be skewed. Sales can't be. That was the most expensive ever. This market is going to be volatile, and it's going to be great for us to be able to trade in the coming months.
So Matt, do you think it's a little bit misleading when maybe Jerome Powell says the economy is good because everybody's employed, but everybody's employed and maybe their wages are a little higher, but inflation takes it all away. So real wages are really lower.
Yeah.
You think it's misleading by him to actually say that?
Well, it's what he's trying to do is further justify raising interest rates, which he has to do anyway. Because number one, they're unnaturally low. Okay, they're artificially low. They have to go back in for what would really be for the economy. Number one, and number two, you do need higher things to fight inflation. Even if the point is we're in stagflation, where you have high inflation and a slowing economy. The way to, I hate to say it, people say the best cure for inflation is high prices, because prices get so high people start buying, and no. But when prices are high because of supply issues, and it's not just it's not very little has to do with the supply chain issues anymore. It has to do with Russia. Russia has the oil embargo, so the sanctions means oil. They're not, the supply side of oil and natural gas is much lower. It's also food. All that wheat, the breadbasket of Europe and Ukraine, that food isn't coming out. Not only that, the most important thing for natural gas. Important thing for food is fertilizer prices. What's the most important thing for fertilizer prices? Natural gas. They're high. We are just months away from being, no matter what we do, fertilizer prices are going to be high in the spring selling season. And that means food prices are going to remain high. And that means people are going to, 64% of Americans today live paycheck to paycheck. If they've got to put food on the table for their family, they're not going to be able to spend it on other things. That's going to hurt the economy. That's why inflation is a problem. And the Fed can kind of talk about, well, employment's doing fine, but what they're really saying is, like, we have to get inflation down, and we have to get the steroids out of the system, and that's going to be a painful process. They're not going to tell you exactly what they're doing and why they're doing it. But that's what they're doing. That's the thing. That's the difference between reading the textbook and knowing what's going on in the real world. That's what traders have to do. Right. Know what's going on in the real world. And that's what's really going on right now.
That's the thing, Matt. Like, if you would just listen to the Fed and listen to the news, what they take from it, you would be living in some different world that's not reality. And I think that's really a good thing, that you're actually just looking at the set of facts with the traders, because at the end of the day, they're putting their money that they worked really hard for to work for them, right? And when you're listening to these people on the TV and stuff, if you're a new trader, you really don't know any better, right? You're just trying to wing it per se. Yeah. So,
and that's the thing is too, in our chat room, we're a team, we're a family. These other chat rooms, they got 30,000 people in there. You don't know who the hell's in there. Maybe they're free. Many of them are free, and that's fine. I mean, people. I'm not trying to say we're the only one. We're the only chat room you should even consider. I'm not saying that. But I'm just saying that there are some people in there, and they claim to be individual traders, or they're really hedge fund traders, trying to get you to go buy a stock because they've already bought it, and then they can run it up. It's pump and dump. They can pump it up and really talk it up, and then you buy it up. They sell it at the higher price. You're stuck, and the thing goes back down. We don't have we know who all the people are. I mean, they're not. As far as we're working hard to make sure that doesn't happen. But again, we certainly don't have thousands of people in this chat room at all, and we're looking out for each other. And like I said, if I said, hey, be careful of this, and the person still bought it. And that's right. I've said, be careful of this. The person still bought it, and they did well, and I was wrong, and that's okay. But at least you're having, and other people say, well, people aren't afraid to say, Matt's saying this, but I think that he's not. I don't know if he's right. I don't have all the answers. I mean, anybody who claims that they do is lying through their teeth. But I do have a bunch of experience and knowledge that I'd like to pass on. And I hope it's come across that I'm very passionate about the markets, and you can't stay in this business for 4 decades if you're not if you haven't been good at what you do. And so I had a call last week again from Carl Icahn. I mean, it was the second time he called me. So there's a lot of good people that follow my stuff and wonder what I'm thinking. And I just think that we've had these guys on Wall, the big shots on Wall Street have done very, very well, and the little guy has been on their own. And this chat room, I think, has been,
Right.
between my experience and other people's experience and other people's give and take, it puts us on much more equal footing than it has for many years. And like I said before, we now have the tools that they never had before until recent years. And it really, these weekly and options are just so much easier to trade and so much cheaper to trade.
Right. And want to give a quick shout out here. McIntyre, welcome to the fam. Let's go. But yeah, Matt, I mean, that's absolutely right. Retail traders have been given the short end of the stick for far too long. And I think it's great that we have somebody with your background and experience to help the retail traders out, right? It's really hard to navigate this, especially you have, people from all walks of life, man, just trying to earn an honest buck here with their savings or whatnot.
Right.
So I think it's really great what you're doing to help all these traders. And again, international community, even better, because you have people that for example, maybe they work at a meat shop in the US, or they can see things in their industry, and it becomes a little bit more of like, hey, this is what I'm seeing in my sector. This is what I'm seeing in my, and all that, right?
Yeah, and we've had that several different times. People sell cars, the car dealerships, people with restaurants involved in here. And we've also said, but we had some really great insights this spring from several people from Eastern Europe, and who said this isn't ending anytime soon, and that really, really helped us. But it's funny though, we even though I was really worried about it, we were still able to and I was very, very bullish. I was probably the first guy on Wall Street strategist to turn bullish on crude oil way back in October of 2020, but. And so all these energy stocks. This is the XLE, which is the oil stock ETF. Let me just get rid of a couple of these lines so it's not quite so busy there. But this is the 200-day moving average, is that purple line. But see how overbought it got? It was way up in here in early June. I said, we got to take some profits, and we bought puts in the XLE and made some real nice money as the XLE dropped. So again, I like to. Then we came back in here. I didn't get right at the bottom. I was a little bit late getting in, but not too late. And we again made some nice money to the upside. You want to be able to make it in both directions. That's what happens in volatile markets. And again, these people on the TV, the financial networks, are saying, "I'm just a long-term investor." That's fine, and there's nothing wrong with that. And that's why we have those things that bucket of money that has that long-term horizon. But why not take advantage of it while it's here, especially when we have the tools to do it nowadays? And if you just own XLE all the way up, well, Chevron, when we got into Chevron, the stock was getting a 7.5% dividend yield, and the stock's up, 300 or 400% since we got into it. Forget about the options. We're just getting into the stock, and put that in your long-term bucket, but still trade around it. Every once in a while, we'll buy some puts in Chevron. We'll buy some calls when it gets oversold, and we just leave it that other one over here and say we're going to let that ride for a couple of years.
Right.
So that's really what and same thing with that. I'll just one more thing here. Apple Computer. Anybody think Apple Computer is going out of business anytime soon? We all know that's not going to happen. But okay, look at 2021. Like 2021. Let's get rid of all these lines. Let's just see. It's very simple. This is just a simple chart. Get rid of that. I want to go to 0101. Oops. Okay, boom. Okay, this was Apple last year. I didn't get rid of the RSI chart. Okay, the market didn't have any corrections, and the worst it had was down 5%, and that 5% decline only happened one day. So, well, the market went straight up. Well, Apple must have gone straight up, right? That's the best company in the world. It went straight up, right? Well, actually, no. This is 2000. It had some significant declines. Look at this. Boom. 19%. Boom. 10%. Boom. Okay, 12%. Now, the overall rally was a very nice one. People who owned it through its ups and downs loved Apple last year. They still love it. I mean, they should. So, 38%. I was up 38% in the stock last year. That's great. But if you were active trader and you go back, and I'll pull back that RSI chart, which is, remember, that relative strength index. and see when it got overbought. If you sold some, say, well, I owned the stock and I loved it, but I bought a few puts here, man, I made even more money. And I bought a few calls there. Look how well you did. Bought some puts up here. Okay, stocks traded sideways. Again, overbought here. Okay, oversold here, et cetera, et cetera. You traded around that position. You did a lot more than just 38%. In fact, in some cases, as we showed you, where we made several 100% in the stock, 400% in one of the moves. This was this year. But you can see that it's like, great, long-term strategy, hold Apple up 30%, 38% 1 year. What a great year. So true. If you're an active trader, you can make considerably more than that, especially in a big name like Apple, because even a stock like Apple in a great, great year for the stock market and a great, great year for the stock still had 3 serious corrections for technical reasons. We this is what we're trying to take advantage of in the chat room, and it has worked out extremely well this year. And I think the next couple of months we're going to have a lot more opportunities. Now this rally, I mean, again, I'm real worried here. Well, the market could bounce back at any time. The market. Well, let's just talk about here. Let's pull it up here. Hold on. Let's look at the S&P. Just a basic S&P index. Nothing special here. Boom. Here we go. And again, you can see let's get rid of it again. All these different lines are moving averages, the 50, 100, and 200 day. But let's, I'm sure a lot of you heard how we got right up to the 200-day moving average and rolled back over. See how it's getting oversold. It's not quite as oversold as it was there other times when the market bounced, but it's getting close. So we could get a bounce literally next week. It may start right on Tuesday. I think it's got more to go, but I'm going to try to take advantage of that as well. But I do think that we'll roll back over, and we'll have some things that we really have to worry about if and when that the next, again, like I said, we're now on the second leg. This was the first leg. Here's the second. I'm sorry. Here's the second leg. And remember, Apple Computer. We're going to watch Apple Computer. I started to talk about this, but let me go back to it for a second. Now, what happened this year? Look how well Apple Computer held up. I mean, the stock market was getting crushed. Well, in March, the market bounced a little bit. Apple went back all the way back to its all-time highs. Okay, it's only when Apple really fell out of bed that the rest of the market got crushed. Well, it looks like Apple's starting to fall out of bed once again. Now, can it bounce back up and get to that 200-day moving average again with their announcements coming this week? Maybe it does. But at some point soon, after that product announcement, I believe it's Wednesday. It's the 7th. So what's today? It'll be second, third, fourth. Yeah, Wednesday. And then after that, what does it do? Is it really enough to push it higher? I don't know about you, but I'm talking to people, and this is not scientific. So I've talked to a lot of people. I mean, a real lot of people in the last several months. And people, I'm at a restaurant, I'm at a ball game, and asking, Apple, you got an Apple, you got an iPhone now. You can upgrade now? No, why? The next one's going to be better, and I'm sure it'll sell well. But first of all, nobody's gets in line anymore for these new products. It's just not that much different. Number one. Number two, they're not cheap. We're heading into a recession. People are paying a lot more for their food and their energy. Do they really need to get up the newest iPhone? I just don't see that happening again. And in history, it's weird because history shows that the 2 weeks leading into a product announcement, the stock does well. Well, this one obviously hasn't this time. So maybe we'll get the opposite. Usually it rallies into the announcement and then rolls over. This time it's sold off going into the announcement. Maybe they'll get the opposite and rally back. My thing is that no matter, we might get a little hoopla in here. In other words, something to help it bounce back. But that 200-day moving average, I think, create resistance. If we roll back over, we break below those lows from last week, which was, so you have it, the low was basically $158. We get back, whoa. I'm sorry, 154.50. So $154. We get below that, that's going to be a big problem. And if that means that this stock is finally going to get, and it's not a cheap stock, it's trading at whatever 26 times earnings. We want to be watching Apple very, very closely in the next 2 weeks, because that's going to be, again, a little oversold. Maybe it can bounce back a little bit. If it breaks below the last week's lows, again, 154.50, 154, that's going to be a major sell signal in my mind. I'm going to be looking to buy puts on a lot of different stocks, including Apple and then the index, especially the leveraged index ETFs. We can make some real money there, because that's when, again, the second wave, some point in the next month or two, I think we're going to get we're going to see those naked swimmers. They're going to be exposed, and we're going to take advantage of it. And but we have to be careful. I mean, I readily admit, when during this rally, I called it here in June. I thought we'd rally, but I stayed bullish way too long. I'm sorry, I turned back to the bullish side way too early. I didn't stay bullish very long, and so this was a struggle for me. But so I don't want to pretend I have all the answers, but we'll react to it as it takes place. But everything is setting up for a real volatile couple of months. And like we said, as we did last week in Nvidia and the TQQQs, we're gonna in a lot more stocks. We're gonna make money on both sides trading this volatility.
Right. Well, look, Matt, we've been here. I don't know if my watch is wrong here. We've been here like 2 hours and 30 minutes or something like that. So it's definitely been a packed session. I told you guys, Matt typically, like, he'll go on the news stage, like, Bloomberg, CNBC for like a couple minutes there, but he's kind enough to be here with us for all this time. Again, he only does this for Benzinga. More importantly, what he does for the chat members, it's through the roof. He's Monday to Friday there all day. I know you guys have a ton of questions. We can't go over all of them because there's too many. But in the chat room, basically Matt's there throughout the whole day. Matt, do you have any closing remarks here on the market before we do move on to the walkthrough of the chat room? Maybe some Q&A the folks have here, closing remarks on the market and on the live room as well.
Yeah, I just the market overall. It's again, this is just, you can't go from massive liquidity injections to taking it away without pain. Now, we've had some pain. I think we'll see some more, but that's okay. Let's take it. We now have the tools to be able to take advantage of it. We've been doing it all year. I think we'll be able to continue to do it. We have a family in the chat room where we're giving each other. I just wrote it down. We've talked about it before, but I've never just like I should have a big picture behind me saying never trade alone. It's just it's really how. It's how we can, people again, these hedge funds and everything, they've got all these analysts and they've got all these tools that they're making, and then we're going to, individuals are going to be able to beat them one-on-one. That's just not going to be able to happen. So we work together. And again, I just think that the volatility that we've seen this year is going to continue. We have an election coming up as well. But it's going to be a cold winter. What's going to happen in Europe? What's going on with Taiwan and China? So many different things, and it's just a situation where we can curl up in a ball and hide in the corner and just say, well, don't worry. 5 years from now, my portfolio will come back. I'll still be up 5 years from now. It's like, well, no, let's be aggressive. Let's be proactive, and get involved. We're not even reactive. Some of those people aren't even reactive. They're just going to hide in the closet or hide under the covers for this and then just go about their day. Well, that's fine. There's nothing wrong with that if that's what you want to do. But if you have the inclination, the interest in doing it, this is where it's really going to work out. And like I said, that the chat room is a great place to do it. I'm passionate about the markets. We're really looking forward to this. A lot of people are afraid of it. I'm looking forward to it because I think it's providing us an opportunity that just again wasn't available to individuals in the past. So good luck with everything. I hope everybody I'll stay around to answer some more questions and stuff. But it's between the Tuesday Zoom calls and our 5 day a week chats, although this would be 4 days, of course, because the market's closed tomorrow. But we're there every day, and it's fun, but it's serious because it's our money, but that's the thing. When if I lose money. If you lose money, I've lost money. So it's not like I give a bunch, I'll give you 20 ideas and hope one of them works and I can claim that. No, it's like, that's when I do a trade, about it. And it's been a real good year. I think it can continue to be. Good luck to everybody. And especially it's really going to be an exciting time.
Matt Maley, Chief Market Strategist at Miller Tabak, lead trader, mentor, best friend at the Stock Picks Inner Circle chat room. Thanks a lot, man. I know that you're a busy guy. Everybody's blowing up your phone here and there. So I appreciate you taking the time here to be with us, with the retail trading community, and more importantly, everything you do in the chat room. I'm going to go ahead and move on here with the walkthrough to show them the live room, Matt.
Sounds great.
Thanks a lot, man, for being here. I'll see you in the chat room Tuesday, right?
Right. Sounds good. We'll see you then. Thanks, Rodrigo, and thanks everybody else.
All right, folks, and I'm going to show you here really quick. There we go. So this is the live room, right? Really quick. I just want to show you a couple things here, right? So we do have 2 channels, okay? 2 channels. Any questions you have about the live room, you can post them in the chat, and that's where I can read them and we can kind of go over this together. But I'm doing this more importantly for you guys to see it and for all the people that joined so that they know more or less what they have to be looking for, right? So this is the live room. Of course, you can see you have these 2 channels. The inner circle chat, that's where everybody's posting value play. We do have a lot of regulars there, to be honest. It's people's workplace, to be honest, right? Where you go in there. James D, I believe, I don't know if this is James Donahue or not. James, if you're here, let yourself be seen. I remember signing him up. There's a lot of familiar faces here for me. I remember I launched these chat rooms with Matt here over a year ago, and it's been nothing but great, nothing but great. A lot of great relationships there, a lot of great people that help each other out and just work together, right? That's really the whole thing of being part of a community. If you're trying to do this on your own, you're going to fall into what I call vacuum trading, and it's really just you and your thoughts, and you do need some bounce back with trade ideas, especially if you're starting out, because you might not even know what you're doing. In many cases with options, if you don't know, you will blow up your account. It happened to me twice. So getting a trading partner is really important. I really suggest it. It doesn't matter if you're a doctor, an attorney. I know people that come from really, good professions as well, finance professionals, including, and that doesn't mean anything. It doesn't put you ahead or behind anybody. The market is its own animal, if that makes sense. So in the inner circle chat, everybody's posting. Matt, you, the members, it's a back and forth communication. So it's pretty much always engaging, right, throughout the whole day. And this chat room is open 24/7, all right, 24/7. Matt is there 9 to 5, Monday to Friday. And tomorrow is off, I believe. So then you have 2 chat rooms here. I'm sorry, the other channel, it's Matt's important messages, right? This is where you're going to find Matt's trade alerts. So for all you guys that are asking the format, it's so simple to follow. Like if you're a new trader, this is where you kind of want to start out. Basic calls, basic puts, and you do learn a lot about the stuff too, right? So you can see here that risk management is very important. That's why Matt is really good and careful about labeling those trades. For example, here, he's going to add a small position to the TQQQ August 12th, $32 put that he owns. So this is pretty much as simple as it can get, right? You get the ticker symbol, you get the expiration date, the strike price, and if he's buying it, right? We're always buying. You're going to see all these trades. They're all basic calls, basic puts. It's never going to be something like do me a short iron condor butterfly with open chicken wings. You're not going to see any of that stuff here unless you request it, right? But for the most part, we're directional traders, and that means that volatility is our best friend in the chat room. If there is a Fed meeting, earnings, I remember this this lady named Tiffany from the chat room. I don't know if she's watching here, but she's, there's a great community there in the chat room. But Tiffany basically shorted Target, made like 4,000 for some insane number. And then she shorted Ross, I think, like the day after or 2 days after. She made like similar. So again, these traders are pretty much working together. They're like mini Matt Maleys. So you're going to find trades not just for Matt, but also from the community, like the Amazon trade. That was another killer trade from a chat member. There's a lot of chat members that have learned from Matt and are able to find volatile events, right? So look at it this way. Volatility is our best friend. So we have to look for it if we want more activity. That's why, as an example, if there's earnings on Tesla, earnings on Amazon, on Google, or this or that, those create volatile events for either the bull side or bear side. It doesn't matter, right? Volatility is what it is. So when we trade that, we have to either find the best events to do that for. Fed meetings are amazing. Also, this current market is a trader's paradise, and it's very easier for you to follow, to mirror Matt's trades. You don't have to be an expert in the markets. All you have to do is literally mirror his trades. When he buys a call, buy the call. When he sells it, sell it, right? When he buys a put, and so forth, right? So it's very easy to follow. You don't really get confused or any of that stuff. I will say something. Everybody that did join will get hooked up. You're getting 2 bonus items from me as a courtesy, Hot Rod, in the house, hooking it up. So you'll see that you'll have something more than the chat. You'll have the chat room and 2 more things. Those are, it's not an error. It's basically like me hooking you up. So the laptop, everybody gets it, Joel. So this is more or less really quick. Now the sessions that is on Tuesdays, that is a live call that you will have. It is not in this chat room. You will get an email with that information basically on how to access the live call so that you can go in there with Matt. It's for 1 hour. It's from 11:30 till 12:30 Tuesdays. That's Eastern, and the chat room's open 24/7. But Matt is there basically Monday to Friday, 9 to 5. And you can see all the members. I mean, look, it's a Sunday, right? It's a Sunday. Number one, I'm here. Matt was here, right? And the members in the chat room are there posting as well, right? So people are always involved here. It's like it's an ongoing thing, right? So you can see that the members are pretty active as well during weekends and weekdays. It never stops. And having that sort of community, that kind of ethic, is really good for new traders to kind of get the sense and the pace of things, right? If they want to. So I'm going to leave the link in the chat for you guys to join. You remember, you do have 7 days to try it out, get your money back for any reason you don't like it. And I'll leave the number there if you do want to send an email or call, whichever works. And that kind of does it here for the day, folks. Have a great weekend. Okay. Enjoy your Sunday. Stay safe. And we'll see you guys in the chat room. Thanks for tuning in. And big shout out there, Matt Maley, all you folks for joining in. We'll see you guys in the chat. Bye.